Let's do this, everybody. This is one of my least watched segments. Do this, everybody. This is one of the most important as well, because a lot of cool things you can do with Bitcoin miners. But let's jump in and see where we are. And it's kind of bizarre how quick the time has gone. I did this 3 months ago, and it seems like yesterday, despite the market kind of being flat for many months, etc. We have seen a lot of cracks form in the system, not only in the global banking system, but also with some of the Bitcoin players, and we're going to examine them in great detail. First, as always, this is not financial advice, it's edutainment, and the story is really, like last time, was a story of risk, and since July, a lot has changed. There's been a lot of concern with liquidity risk, and it looks like it was a good thing to focus on back then, how strong balance sheets are, etc. But what's amazing to me about the Bitcoin miners is how each one is completely unique. They all have different debt structures, balance sheet structures. They all do different liquidations, how they plant their miners. They have different dilution factors and how much equity they issue. Some hodl Bitcoin, some sell it, etc. So we're going to go through all that machinery and figure out. But first, we're going to talk about some of the headlines. First of all, the miners themselves, they face what I call a triple whammy. And there's a bunch of headwinds, but the triple whammy is made up of exploding energy prices, exploding hash rate, as some miners have outages because of storms and heat waves, etc. from the hot summer, which are behind us now. And of course, combined with all that is the very low Bitcoin price. And you can see here, Bloomberg are aware that they are facing these terrible headwinds. Let's talk about some headlines just from today. This is from Argo blockchain. They fell about 14% today. It's actually a little higher than that because they disclosed deals to sell some of its machines and also issue more shares to raise capital to strengthen its balance sheet amid a challenging environment. Again, as if the dilution wasn't bad enough already, Argo is going to issue more shares, which is not good for shareholders. And in addition, there was a lot of marathon headlines floating around yesterday. I slightly saw one that was a little bit off, but Marathon Holdings have had some struggles as well. They produced only, I think, 616 Bitcoins in Q3, down from 1,252 a year earlier per MT Newswire. And then there was the whole Chapter 11 scare. One of their partners, not Marathon, but one of their partners, basically filed for Chapter 11. And there's a couple of things related to that. One is Marathon could lose up to $60 to $80 million of losses, perhaps. And also a lot of their gear is in limbo. They have something like 63,000 miners that are in transit that they need to plug in somewhere. So a little bit of a headache. But today we're going to look at the following mining companies: Argo Blockchain, Bitfarms, CleanSpark, Core Scientific, Hive, Hut, Marathon, and Riot. These are the top public miners in terms of hash rate out there in the United States. Before we jump into the mechanics of where the market is right now, let's look at the year-to-date performance for some of these assets. And you can see, speaking of Marathon, we just touched on, they're the least down so far year-to-date, despite another hit today. But they did get hit in Q4 of 2021. So that's why it's down, while others like Core Scientific didn't get hit until 2022. But you can see here, Core Scientific is down the most, Bitfarms second most, Argo third most with their financial problems, Hut 76%, Hive, etc. You'll see that Bitcoin is outperforming all of the miners. So think about that when it comes to investing. Historically, year to date, Bitcoin beats all miners. So that should tell you something. But also, it could tell you there might be some upside. We'll talk more about that later as well. So let's do a quick refresher. Bitcoin issuance mined per day. Today, right now, it's about 900 Bitcoin. And in about 2 years, it'll be 450 Bitcoin mined a day. All these big public miners, all this hash rate is going to compete over that. And that's why many miners are investing hard right now, I believe, to take advantage of the next 2 years because, 900 Bitcoin a day are available. And some of the public miners as well mine well over 10 Bitcoin a day for their efforts. Now let's look at mining difficulty. Plan B actually posted this yesterday. He sees an explosion in hash rate as a potential trigger for the next Bitcoin bull market because miners know something, hence they are jumping in hard. And Bitcoin mining difficulty crossed an all-time high of about 35.6 trillion hashes today as miners ramp up their operations and more miners are joining the network. So what's going on here? Bitcoin price is low, competition is fierce, and tons of miners are joining in and existing miners are plugging machines. Let's get to the bottom of this and find out, maybe is there hope? Maybe this could be an early indicator that Bitcoin price could start going up again. So let's look at difficulty, what this means for revenue. Hash price is a miner's daily revenue per terahash second of hash rate. And the hash price is determined by the mining difficulty and the Bitcoin price. So if you see here in this chart, you see during the heyday of October 2021, hash price was about 42 cents per terahash per second, meaning it's fallen 81% since then per that little red arrow on the chart. And for the companies with high fixed costs, an 81% decline in revenue has a massive impact on margin and liquidity, and all public miners have seen their gross margins plummet 80 to 90%, and some are facing liquidity problems, which we expected in the summer, but we'll see what's going to crack over the coming months, because unless the price rebounds fast, there will be some hell to pay. So let's look at public miners, how they are expanding their hash rate. And this is a sum from Arcane Research of the top 25 Bitcoin public mining companies out there. And they make up about 25% of Bitcoin's hash rate. And you can see currently it's at about 53.7 exahash, and it's expected to go to 80.7 exahash by year end. I think that might be a little bit ambitious, but you know what? Watching the hash rate go up vertical, maybe they have to scale to compete. But that extra 27 extra hashes is about a 50% increase from today. And what's also important is I estimate the break-even point for Bitcoin price to make it profitable for miners to mine is about 14,000. Now, would all the miners be jumping in and investing so hard if they thought they could risk insolvency if Bitcoin went to 14,000? This is another indicator that tells me, no, I don't see Bitcoin going to 14,000. It might potentially wick down there for a very short period of time, but all these miners wouldn't be investing all this capital if that was the outcome. So let's look at the top 5 miners. You can see here Core Scientific. They're currently at 13 exahash. They're going to go to about 16.8 by year end. Riot 5.6 to 9. Bitfarms 4.2 to 5.3. CleanSpark 4.2 to 5. And Marathon 3.2 to 10.1. I think the Marathon one is extremely questionable. You cannot triple your hash rate in 90 days or less. Don't care what anybody says. Not happening. And the one for, let me see, Riot, going from 5.6 to 9. I sincerely doubt that as well. But we'll see. We'll check back in a quarter and see if I'm right. Now, one of the miners that has been very impressive, and they have delivered on promises, is CleanSpark. So they added 30% of their hash rate in 30 days. So for them to go from 4.2 to 5 is believable in 90 days. So we'll keep an eye on that. Now we're going to jump into the ratios I look at, and we'll get to a composite score at the end. I'll tell you which one is the best miner based on their price today and all of their financial ratios and metrics. So the first one I like to look at is the market cap divided by exahash. And for me, this is probably one of the most important metrics because it looks directly at capital efficiency. And it's the market cap of the company divided by the number of exahash produced, simple ratio. And CleanSpark is the most capital efficient. And you can see to the right, the big blue line up there, at nearly 400 million in exahash, is Marathon. And that is not capital efficient. You never, ever want to invest in a company that's not capital efficient. Just finance any company. It doesn't matter what it is. Second one we'll look at is just a little bit more perspective. It is the market cap over exahash. and alongside the Bitcoin mined per month. So you get two perspectives here on this one chart. The blue line is that market cap over exahash rate. And again, you can see Marathon is through the charts and CleanSpark is low. Also, the Bitcoin mined per month, the red, is Core Scientific, also through the roof. 1,334 Bitcoin mined per month, which is kind of stunning. This data is from September and it's published October 2022. Obviously, we don't have 2022 numbers yet, but that is extremely impressive for those guys. You look at some of the other players as well and how they are doing. Again, a mixed bag. And as I said at the beginning, no two miners are alike, which is pretty stunning. So the third ratio we look at is what I call Bitcoin mined per month per exahash. It's another metric, and I think it's very, very important to look at here. You can see some of the top names like Hive and Argo top at around 140 Bitcoin mined per month per exahash. Others kind of around the 120 mark. And then you have Core Scientific just over 100. And remember, sometimes some months, the time at which they plug in their machines versus when they start mining, etc., there can be a lag. And that's why some of these numbers are off. But I think for this ratio, you need to be very close to 100 at the very least. When you're down around 50 or 60, that's not good. And those two on the right, Riot and Mara, are down around those levels, which is not good. So let's start looking at some financial ratios here. This is a basic one. It's book value less price. We always look at this. It's a financial ratio of the actual book value per share less the actual price per share. And if it's positive, it's good. If it's negative, it's not good. And a couple of them here are negative. So if we look at CleanSpark, it is the most positive. The book value of the business is $9. It's trading at $2.93. So as an investor, you look at that and say, that looks juicy. And then you see Marathon. It has a price of $10.68 and a book value of $5.79. That is not juicy. So you want to avoid that type of stuff. Riot is positive. Hashrate is positive by about $1. And the rest you can see yourself. So again, a mixed bag all across the board here. Next set of ratios is a simple one. It's distance from the 52-week high. And what I like to see is if you can see something well off its all-time high, but it still has very good fundamentals, that can be, it can mean some good upside. So here you can see Core Scientific is 91.32% off its 52-week high. All of them, all across the board, are typically between 87% and that 91% off. So they're in that tight little bunch, and it's kind of staggering to see all of them within those 4 percentage points. But again, Core Scientific, per this, could have the most upside, but it's again very tight. But just something that's fun to look at sometimes. Next one is Bitcoin as percentage of balance sheet. And Hashrate is the winner. These guys have been hodling for the best for a long time. But what's really interesting in this quarter analysis, I'm seeing competition come up from behind very fast, namely Argo, Bitfarms, and Hive. They're really beginning to follow the Hashrate hodl ratio. And then you have other names that basically they earn Bitcoin and they sell as quick as they can to invest going forward. So we see that with things like CleanSpark. And I'll talk more about what they did as well later in this presentation. Core Scientific have been selling quite a bit too. It really all just depends how you want to pay it forward. So if you think about some of these miners, they were selling Bitcoin at 30,000. That made sense. If they're selling at 30,000 and using that money to buy rigs to plug in and get ready for the next bull run, they will be in the catbird seat, as they say. Next one is shareholder dilution, and we heard that Argo is going to issue more shares. So this is before they announced that news. But you see Riot shareholder dilution 41%, which is horrific. Argo 25.1, that's going to go even higher. Bitfarms 25, Hashrate 22, CleanSpark 21.6, not good. Hive, Mara, and Core Scientific 0 shareholder dilution, which is kind of impressive. So that's kind of the lay of the land. And of course, these companies need capital to reinvest. So there's nothing really wrong with that. It's not like they're issuing tokens to dilute existing token holders. They're reinvesting the money, but still, some of those numbers are quite high, namely the Riot and Argo blockchain. So here we are at the conclusion already. There's a couple of things I just do want to note here is we are in this weird situation. We've been in this bear market for a long time. Bitcoin price has been depressed. Electricity costs have gone up. The supply challenge by getting chains to get new miners and rigs has been kind of hard. There's a lot of new technology out as well that makes it like an arms race for miners to get access to these rigs as quickly as possible. Again, no two balance sheets are alike. Every company was treated equally. That's where we are. So let's talk about the non-financial advice. It's based, as usual, on about 37 different ratios, future exahash predictions, 2022 estimated earnings, HODL ratios, you name it, balance sheet risk, and a whole bunch more. But one of the things I do want to stress is the Bitcoin price, if it does go to 14,000, it will result in a lot of insolvency for a lot of these players. If it wicks down there for a short period of time, it's fine. If it stays down there, all these companies are smashed. But that's why I believe, because they're investing so hard and so heavy on Hashrate now, they're getting ready for the next bull run. They're getting ready for the next 2 years. And that's why I think it's kind of interesting. So this is based today with heavy weightings on the composite score, on the gainers, which is the upside based on analyst price targets, the price to book ratio, the market cap over exahash, the Bitcoin value as a percentage of market cap, stock dilution, balance sheet risk, largest distance from 52-week high, a little tiny factor, and the Bitcoin mined per exahash. All of these are the big influencers for the score this time around. And I tweak how we manage the score based on market conditions. Now there's a big focus on risk and liquidity. The winner today, for the first time, I think, is CleanSpark. And they win the overall composite score, probably due to being the most capital efficient, plus doing things like increasing hash rate by 30% in 30 days. They've been keeping their promise to grow their hash rate. I do believe they can get to 5 by the end of the year, 5 exahash. They currently just recently achieved 4 exahash. And you could also argue, this is a weird thing, you could also argue they played a great move by selling Bitcoin back in May before the downturn. A lot of people are like, oh, these guys are mining Bitcoin, they're not hodling it. It was a genius move to do that and invest in new rigs. And that's why they can scale their exahash rate much faster than many of the competition. And again, it's also very interesting to compare this strategy to HUT, as CleanSpark doesn't retain Bitcoin's mined, at least not at this stage of the game. So we'll see. Maybe when the bull run comes on and they have enough liquidity and they have all their exahash in place, they won't need to do that. Second one is Core Scientific. And despite Core's having a little bit of Texas exposure and high debt, they still came in second. They have a lot of hosting and equipment sales that contributes to about 30% of their revenue and 9% of profits. And one of the things that is dangerous, and all of these miners are in the same place, is they do have debt and they had some big carry forward losses as well going forward. So it all remains to be seen, but they are growing their hash rate like crazy. Next bull run, once the price starts going up, these guys will be making a lot. And we saw that they were mining about 1,300 Bitcoin a month. And that's only going to grow as their hash rate grows from about 13 to 16 by year end. So watch these guys carefully. Yes, they do have balance sheet risk, but their ability to mine is second to none out there. And third place is Hashrate. Hashrate did fall in a few scores, and they've won this competition 2 out of 3 times over the last 3 quarters. They've never come in third. They were a runner-up once, and the results might be due to the ETH proof-of-work mining business change. Also, maybe holding Bitcoin was once a great strategy, but in this long bear market, it may have made sense to sell a little bit in April and May, and then scale the hash rate going forward, like what CleanSpark did. So again, everything is different, but this is where they are in third place, and we'll see where it all goes. The ones that I'm most worried about in terms of the at-risk miners because of balance sheet risk is, Marathon has some upcoming payments. They had that loss with their partner. They got some machinery in limbo, a lot of problems. Hive also have a little bit of balance sheet risk, and Argo blockchain openly admitted they need to liquidate their rigs and issue more shares to get more money in to protect their balance sheet. So these are the at-risk plays. This is the summary for October 2022. Next time I'll do this will probably be January, but depending on if there's a lot of change or if some of these miners start to break, this could be a good opportunity as well for other miners to come in and grab cheap assets, kind of like a liquidity sale. And that will be interesting to watch. And then I might do an update more as we go forward. So with that, just remember, miners are a cutthroat business. Always said that from day one. If Bitcoin price does fall below that $14,000 level, not saying it's going to happen, these miners seem to know what's happening in the market and they're investing heavily. So that seems like a very bullish sign to me. But remember, they're on very shaky ground right now, all of them out there. So with that, thank you so much, everybody. Thank you to the mods in the chat. Thank you to the 1,300 people watching live. And I'll see you all tomorrow. Bye.